Retail options is close to a coin flip because most tools sell you consensus dressed up as insight. StockAgents does the opposite. Every number on the screen is produced by a deterministic engine. Type what you want to trade in plain English and the engine reads your intent across 9 dimensions: direction, price action, trade horizon, risk structure, debit or credit, sector, market cap, all classified from the sentence, no forms to fill. Once intent is locked, the engine generates a weighted condition set, implied versus realized moves around earnings, average up move over the last 8 quarters, open interest, bid-ask spread, net dealer gamma. Every variable is marked soft or hard. Soft conditions contribute weight to the ranking. Hard conditions cut candidates outright. Every threshold ships with a rationale explaining why that value and not another, and every value is editable in place. Nothing here is a black box. Need something the engine did not pick? There are over 1,500 variables across 32 sections: price, volatility, fundamentals, technicals, options flow, macro, search, click, set the operator, choose soft or hard, done. The condition preview updates as you build. The scan returns ranked results, scored on variance and edge. Realty income at the top. JP Morgan with earnings 1 day out. Johnson & Johnson with earnings in 2 days, showing up 3 separate times with 3 different structures: call back spreads, put back spreads, long strangles, long straddles. Each row shows the strategy, the sector, days to expiry, the total score, and the measured edge against model price. The ranking formula sits right at the top of the table in the open. Click into Johnson & Johnson. Earnings in 2 days. EPS estimate 285, revenue estimate 25 billion. Below it, the peer relative read, momentum in the global top 18%, growth and value middling, risk in the global bottom 20. Valuation is measured 3 ways at once: against the world, against the sector, against the industry. A PEG in the top 1% of its industry means something different than a PEG in the top 1% globally, and the card shows you both side by side. Insider activity is charted quarter by quarter, acquisitions in green, disposals in red. Last quarter, insiders acquired 1.2 million shares across 92 transactions. Now hand it to deep dive, ticker, horizon, and a thesis, long straddles or strangles into earnings. The engine restates what you locked in and what it detected, then runs live web search for news and catalysts. Not a stale feed, an actual search at the moment you ask. Sentiment score 62 of 100, leaning positive, 5 bullish developments, 0 bearish, 1 neutral, 3 analyst targets averaging 6% above spot. Here is where honesty matters. Direction reads 50 out of 100, dead neutral. And the engine says, why? Earnings within 3 days makes any directional call uninformative. It refuses to manufacture a view. What it can measure is positioning. Dealers are long gamma, net jacks around $19 million, an environment it labels slow grind bullish. Moves get dampened, dips get bought, call wall at 260, put wall at 250, 250, max pain at 230, 10% below spot. The verdict, a long strangle over 2 days, scoring 97.6 out of 100, best of 3 structures considered. The options screen cheap against the model, about 14% underpriced. Conviction on the setup, 95. The runners-up are shown with the exact gap. Long straddle trails by 9.6 points of theoretical edge. Iron Condor scores lower overall. You see why the winner won. Not just that it won, every call comes with both sides. What supports it? Volatility ranks near the top versus peers. Analysts estimate strong, a hard catalyst in 2 days. What argues against it? Weak sector and macro, and expectations risk into the print, where even solid results can get judged against guidance. Then the exit triggers, each one live. Direction below 65, dealer positioning flips. Take profit at 50% of the debit. Hard stop at minus 75. Ask it anything about the position. Every card shows how it was computed. StockAgents, live in beta at stockagents.app.